Welcome back. How have the world's major economies responded to Trump's tariff war? When President Trump unveiled his April 2nd tariff salvo and ostensible defense of American workers, he might as well have announced a global performance art piece in economic masochism. The administration slapped a 10% blanket tariff on all imports and threatened heftier reciprocal rates on countries running trade deficits, only to pause most of those higher levies within a week except, of course, on China. Thus began an international tango in which every major economy scrambled to learn the new steps of retaliation, negotiation, or sheepish compliance. Little did they know how amusing it would be to watch superpowers haggle over soybeans, rice, and car crash test dummies. Let's start with the United States. The United States uses tariffs as a way of governing the country. The White House insists these sweeping measures are vital for national security, even as the Committee for a Responsible Federal Budget calculates that the 2025 tariffs will drain $587 billion in dynamic revenue effects over the next decade and shave 0.6 percentage points off the unemployment rate, i.e., cost Americans jobs. Consumers were not buying it either. As a result, domestic prices rose by an average of 2.4% year-on-year in March, a surprise uptick that Trump blames on greedy companies, not his own policies. Meanwhile, Yale's budget lab warns these duties will suck $2.4 trillion from the economy through 2035, raising the specter of self-inflicted recession if left unchecked. Despite the White House's bravado, a Reuters poll finds only 24% of Americans support broad tariffs on allies, down from 35% in February, while 71% worry about higher grocery costs. Republican senators from farming states have quietly lobbied the administration to spare agricultural machinery and seed imports from the 10% levy, lest their constituents revolt in November. The administration's retort, a 90-day tariff pause announced on April 9th, wide enough to buoy markets briefly but narrow enough to preserve Trump's tough guy image. Now let's look at China's response, which is truly the art of tit for tat and never giving in. China's initial response to the April 2nd tariffs was decidedly measured, matching U.S. levies dollar for dollar on American imports, even while dispatching feelers to signal potential de-escalation talks. Beijing's negotiators, mindful of the $600 billion in bilateral trade at stake, have touted a never-yield posture, though behind the scenes, some enterprises pivoted toward India, ASEAN, and Africa to cushion the blow. China's export growth decelerated to 3.2% year-on-year in March, down from 7.4% in February, reflecting both global demand woes and U.S. tariff headwinds. Industrial profits slipped 4.1% over the same period, marking the first quarterly decline in 2 years and forcing state-owned giants to lean on government stimulus for support. Yet China's stock market's ever a barometer of collective nerve climbed 1% in mid-April after whispers of a fresh round of policy easing, underlining Beijing's capacity to control the narrative. Let us look at Europe. Is it one EU or EU in diversity? Faced with Trump's sweeping measures, Brussels hurried to draft retaliation proposals on steel, autos, and pharmaceuticals, but found itself tripped up by rifts between Germany's export juggernauts, France's farmers, and the Baltic states' smaller economies. The European Commission has until late April to secure unanimous approval for retaliatory tariffs, a feat that requires cajoling reluctant capitals into solidarity while all the while dodging U.S. threats of counter tariffs. Eurozone industrial output contracted 0.2% in March, a first dip since last year's energy shock, and the bloc's manufacturing PMI slid to 48.7, below the growth threshold thanks in part to U.S. tariff disruptions in global supply chains. Germany's auto producers, facing potential 25% U.S. duties, announced a €4 billion fund to support domestic retooling, an ironic nod to Brussels' call for strategic autonomy. Speaking of Japan, having endured a 24% levy on its exports, albeit paused for 90 days, is now contemplating radical concessions to placate Washington, easing safety standards for soybeans, rice, and even car crash tests. Reports suggest Tokyo may align its automobile safety benchmarks with U.S. crash test protocols to secure tariff relief, a move that could undermine domestic consumer protections. March exports to the U.S. slumped 6.5% year-on-year, dragging Japan's overall trade surplus down to 650 billion yuan, its lowest surplus since 2020. The yen, once a safe haven currency, slid to 136 per dollar as investors fretted over Tokyo's willingness to bend the knee to preserve market access. Finance Minister Katsunobu Kato lamented that tariff volatility could derail Japan's recovery, urging a swift resolution even as negotiators tiptoe through the chaos. Canada is building fortresses north of the 49th parallel, implementing the Trump line of defense strategy. In response to the U.S. levies, Liberal leader Mark Carney unveiled a $30.9 billion platform to strengthen Canada's defense, Arctic presence, and supply chain resilience, complete with submarines, icebreakers, and quantum computing labs. His blueprint also includes 25% tariffs on U.S. auto imports that flout USMCA rules, a move explicitly designed to counterbalance Trump's tariff sword. Ottawa's coffers may feel buoyed by planned military spending, but business surveys reveal that 62% of Canadian exporters worry about U.S. market access. Even with tariff pauses in place, DHL's recent suspension of high-value U.S. shipments over $800 underscores the operational mayhem tariffs have caused in Canada's e-commerce and luxury goods sectors. India embarks on the path from provocation to dialogue, initially slapped with 26% tariffs on select goods and a 10% blanket rate. India chose pragmatism over tit for tat, locking in terms for a 19-chapter trade deal and arranging formal talks on April 23 to forestall further duties. New Delhi's swift pivot, completing detailed legal text within a week, reflects its eagerness to diversify away from Chinese supply chains and curry favor in Washington. Despite the tariff threat, India's exports rose 5.8% in March, buoyed by shipments of pharmaceuticals and engineering goods to non-U.S. markets. The rupee, holding steady at 80 to per dollar, suggests investor confidence in New Delhi's diplomatic dexterity. Other G20 members are waiting with bated breath, while the IMF is cautiously optimistic. IMF Managing Director Kristalina Georgieva cautioned that Trump's tariffs pose a significant risk to the global outlook, yet stopped short of predicting a recession, perhaps mindful that naming it might summon it. Updated forecasts trimmed 2025 global growth to 3.1%, down from the January forecast of 3.4%, but maintained that coordinated policy easing could avert a downturn. Emerging markets also under pressure. Indonesia's trade surplus narrowed more than expected in March as exports contracted to 0.3%. Reflecting softer demand from both China and the United States. Turkey's lira slid 4% after Ankara resisted joining U.S. tariff negotiations, highlighting the dilemma faced by mid-tier economies unable to pick sides. The tariff war has also caused global market volatility, stock market fluctuations, and bond spreads. Wall Street endured a steep sell-off after April 2nd, with the S&P 500 down 3.1% at the low, only to rebound to 0.4% on April 9 when tariffs were briefly paused. Corporate bond spreads widened by 15 basis points, signaling heightened credit risk as companies grapple with input cost inflation and supply chain disruptions. Inflation, recession concerns, and policy dilemmas also followed. U.S. consumer prices dipped 0.1% in March, a temporary relief before tariffs bite into producer costs and feed through to retail shelves. Yet a Reuters poll gives a 45% chance of recession within the year, reflecting a growing chorus that tariff-induced shocks could overwhelm monetary authorities' efforts to tame inflation. In barely 3 weeks, President Trump's April 2nd tariff offensive has transformed global trade into a theater of the absurd. Allies grudgingly drafting countermeasures, erstwhile enemies haggling over soybeans and safety tests, and financial markets oscillating between dread and relief on a moment's notice. Whether this performance art will conclude with a negotiated denouement or an encore of escalations remains to be seen. Meanwhile, the world's major economies continue their reluctant pause, do each step a blend of defiance, concession, and unintended humor, proving that sometimes the best way to underscore the value of free trade is to throttle it and watch the punchline unfold. This is our summary of the tariff war today. Welcome to subscribe to the channel. Thank you for watching.